So, I want you to imagine a swarm of, like, hostile autonomous drones, right? Just flying straight at a target.
Right, and we're not talking about remote-controlled toys here.
Exactly. No human pilots at all. They're, communicating with each other, adapting to the terrain on the fly, just executing this fully coordinated strike.
Which is terrifying, honestly.
It really is. But then, picture an aircraft circling, I don't know, miles and miles away, and it just silently drops them out of the sky one by one.
Using a laser, right?
Yeah, an invisible, high-powered laser. And the whole thing is managed entirely by an AI that it identifies the drones, tracks them, and fires in literally milliseconds.
I mean, that sounds exactly like a pitch for some huge summer sci-fi blockbuster.
Right. But it isn't. That is the actual, literal, stated research and development roadmap that is currently getting funded by a $150 million quarterly budget.
By Elbit Systems.
Exactly, Elbit Systems. And we are looking at a fundamental shift in how the actual mechanics of global defense operate.
Yeah, the transition from, kinetic metal-on-metal warfare to this totally software-defined, networked combat. It's happening so much faster than most of the market even realizes.
Oh, completely.
I mean, when you look at the sheer amount of capital being deployed to solve these incredibly complex physics and engineering problems, you start to realize something.
What's that?
That the whole traditional definition of what we call a defense contractor is just becoming obsolete.
So true. And that is exactly the kind of Talk Tickers energy we are bringing you today. Welcome to the show.
Glad to be diving into this one.
So our mission today on this deep dive is super simple. We are breaking down the Q1 2026 earnings call for Elbit Systems.
The ticker is ESLT, for those of you tracking at home.
Right, ESLT. They are this massive global defense and homeland security company, headquartered in Haifa, Israel, but they have this sprawling footprint across, North America, Europe, the Asia Pacific.
They're everywhere, basically.
Yeah, everywhere. And today, we're going to try to deliver the 3 or 4 most critical takeaways in under 5 minutes right up front. And then we're going to spend this entire deep dive just tearing into the underlying numbers.
The numbers, the tech execution, and management's forward guidance.
Exactly. Because at the end of the day, we want to give you actionable intel. We want to figure out if ESLT is a buy, a hold, or a fold for your portfolio.
And the data coming out of this specific first quarter it's anomalous. It really demands a closer inspection.
How so? Like anomalous in a good way?
Yeah, I mean, defense primes usually operate on these really long, highly predictable cycles. You almost never see aggressive, sudden inflection points in their quarterly filings.
Unless, they buy someone or bro a massive contract?
Right, unless there's a huge acquisition or just a catastrophic failure in a major program. But Elbit's Q1 results just completely break that mold.
Okay, let's pull up the headline numbers then, because this is where that anomaly really starts jumping off the page.
Let's do it.
So revenue for Q1 2026 came in hot at $2.189 billion. That is a 15.5% jump from the $1.896 billion they reported in Q1 of 2025.
Which is a massive leap for a company of this size.
It is. But the thing that immediately caught my attention in the transcript was that this Q1 revenue actually eclipsed the preceding fourth quarter.
Yeah, the Q4 beat.
Right, and in this sector, Q4 is almost universally the massive billing quarter, right? That's when governments just flush their remaining annual budgets so they don't lose the funding next year.
Exactly, the classic use it or lose it spending spree.
So seeing a Q1 beat a Q4, that suggests a demand curve that is just totally breaking traditional seasonal budgeting.
It's completely overriding the traditional calendar. It's just sheer procurement urgency right now.
Like they can't wait for December.
Right. When a European Ministry of Defense realizes their stockpiles are critically low or they figure out their legacy systems just cannot interface with modern NATO data links, they don't wait for the December budget flush anymore.
They just authorize the spend today.
Immediately. 15.5% top line growth for a company doing over $8 billion a year, that is a massive supertanker changing direction incredibly fast.
But okay, top line revenue is really just the opening act here. The number that we really need to scrutinize is the bottom line.
The EPS is wild.
It is wild. Their non-GAAP diluted earnings per share came in at $3.87. That is a 51% increase year over year.
Compared to the $2.57 back in Q1 of 25, yeah.
Even their GAAP EPS, which, carries all those one-time charges and accounting noise. That was $3.34, still up 42%.
It's a huge divergence from the revenue growth.
And that's exactly where I have to apply some friction, right? Because a 15% bump in revenue yielding a 51% bump in earnings implies a totally radical change in how they're running the kitchen.
Definitely.
I mean, we are in an inflationary environment. Raw materials are expensive. Aerospace labor is incredibly expensive. So how do they squeeze a 51% profit increase out of just a 15% sales increase?
Were you thinking price gouging?
I mean, are they just taking advantage of a captive market and jacking up the prices on the menu because everyone's desperate?
It's a fair question, but the actual mechanics of defense contracting make arbitrary price gouging almost impossible.
Really? Why?
Especially on established programs, governments audit everything. What we're actually seeing in that EPS divergence is just textbook operational leverage.
Okay, translate that for me. What does that look like on the factory floor?
It's driven by a shift in their product mix. Look, if a company sells, let's say, 1 million artillery shells, their profit margin is basically fixed by the cost of the raw steel and the energetics.
The actual explosive powder.
Right. You have to buy steel for every single shell. But if that same company sells a network command and control software suite, the math changes completely.
Because it's code, not metal.
Exactly. The initial R&D cost is astronomically high to write the code, but the marginal cost of selling the second or the third or the 50th software installation.
It's effectively zero. You just copy and paste the software.
Yes. The software economics are bleeding straight into their hardware business.
Oh, wow. So the more they scale, the wider the margin gets because the fixed costs are already paid for.
Precisely. And the proof of this is mapped out perfectly in their margin data. Their non-GAAP operating margin crossed 10.1% this quarter.
Which was up from 8.7% last year, right?
Yeah. And crossing into double-digit operating margins is a major, major psychological and financial threshold in heavy defense manufacturing.
It's usually a single-digit margin business.
Always. But the CFO, Kobe Kagan, he made it very clear on the call that this expansion was a deliberate shift toward higher margin technologies.
Like the AI and the cyber stuff.
Right. When revenue scales on software-defined systems, electro-optics, and cyber intel, almost all of that gross profit drops straight through the operating line.
Because, like you said, you don't have to build a whole new steel forge just to deliver a software patch.
Exactly.
Okay, that makes total sense. And that structural shift, you can actually see it showing up in the free cash flow as well.
The cash generation was huge.
Yeah, they generated $210 million in free cash flow just for the quarter. That's up 30% from Q1 2025. And their cash provided by operating activities hit $281 million.
Which is incredibly healthy.
But here's the interesting part. Management attributed a significant portion of this cash to an increase in contract liabilities.
Right, which sounds bad if you don't know the jargon.
Exactly. For you listening, if you don't track defense accounting nuances every day, an increase in liabilities sounds like they're going into debt. But in this context, it usually means customers are front-loading cash.
Yep. They are paying advances.
Right. They're hitting early developmental milestones, and the customer just hands them a giant check, which allows Elbit to pull that cash onto the balance sheet way before the final product is fully delivered.
And that acts as a massive de-risking mechanism for the company.
Because they aren't using their own money to build the factory.
Exactly. Think about it. When a sovereign government gives you hundreds of millions of dollars in advance to build out the manufacturing capacity for their specific order, you aren't going out and financing that expansion with expensive debt.
Which is huge in a high interest rate environment like we have right now.
Exactly. You are financing it with the customer's cash. That $210 million in free cash flow provides the liquidity they need to just aggressively fund their internal R&D without ever tapping the debt markets.
Okay, so the headline numbers paint a really clean story here. Double-digit growth in revenue, a massive 51% spike in EPS driven by that software margin expansion, and a balance sheet that's just swelling with customer cash advances.
It's a very strong foundation.
But, top-level financials can sometimes obscure where the actual geopolitical demand is localized, like who is actually buying all this stuff.
Right, you have to look at the geographic mix.
So naturally, Israel makes up a large portion, about 37% of revenues.
Okay.
But the true growth engine, the segment clearly driving this operational leverage, is actually Europe.
Europe has just woken up.
Completely. Europe contributed 23% of revenues, North America was 20%, and the Asia-Pacific region was 16%.
And the commentary on Europe from the executive suite was highly definitive. I mean, they aren't just seeing a temporary little bump in orders.
Right. They use the word profound to describe the shift.
Yes, profound.
Yeah.
We are basically watching the real-time execution of the NATO 2% GDP defense spending mandate.
Right. The rule that NATO members are supposed to spend 2% of their GDP on defense.
Which for years was honestly just a political talking point. Nobody really enforced it.
Yeah.
But now it is translated into actual binding multi-billion-dollar parliamentary appropriations.
When you dig into the specific business segments in the transcript, you can map out exactly what these European budgets are prioritizing.
It's very revealing.
So land revenues spiked 27%. Management attributed that heavily to ammunition and munition sales in Israel and Europe.
Right, that's the kinetic consumable side of the business. You fire an artillery shell, you have to immediately buy another one.
Exactly. But then you look at the C4I and cyber segment, and for those wondering, C4I stands for Command, Control, Communications, Computers, and Intelligence. That segment jumped 17%.
A huge leap for a tech-heavy division.
And the stated driver there was sales of radio systems and command and control systems in Europe. And I want to pause on the radios for a second, because we aren't talking about like standard issue walkie-talkies here, are we?
Oh, no, not even close. We're talking about advanced software-defined radios.
Okay, why is a modern European military suddenly scrambling to upgrade all of their communications gear? What's wrong with the AUG stuff?
Because the electromagnetic spectrum has essentially become the primary battleground. Look, in legacy conflicts, if you wanted to stop an enemy from communicating, what did you do?
You just dropped a bomb on their radio tower.
Exactly. You physically blew it up. But today, adversarial electronic warfare units, they don't use bombs for that. They use massive jammers to just flood the spectrum with white noise.
So it just drowns out the signal.
Right. It completely severs the data link between a commander in a tent, a drone in the sky, and an artillery unit on the ground. Everyone goes deaf.
So how does a software-defined radio fix that?
Because it operates completely differently. An old legacy radio broadcasts on one fixed frequency, like tuning into 98.1 FM. If someone jams 98.1, you lose the signal.
Okay, makes sense.
A software-defined radio uses complex algorithms to continuously scan the entire spectrum, and it seamlessly hops across thousands of different frequencies every single second.
Wait, thousands of times a second?
Yes. So if an enemy tries to jam a specific band, the radio has already moved on. It automatically routes the data packets through pathways that aren't jammed yet.
That is wild. So if your legacy radios can't frequency hop fast enough, your entire military basically goes deaf and blind the moment the conflict starts.
Exactly. That explains why upgrading that C4I network is the absolute prerequisite for any modern military, long before they go out and buy new tanks or jets.
Because the tank is completely useless if the commander can't talk to it to tell it where the target is.
Precisely. And that ties directly into the third segment that saw a massive spike this quarter. ISTAR and electronic warfare jumped 17%.
ISTAR, that's intelligence, surveillance, target acquisition, and reconnaissance, right?
You got it. And management highlighted airborne high-power lasers and electronic warfare systems as the primary catalysts driving that 17% jump.
And it's so interesting to compare those 17% and 27% leaps to their older, more traditional segments.
Yeah, the contrast is stark.
Right, because Elbit Systems of America, or ESA, that only increased by 5%, primarily due to night vision systems. And their aerospace revenues only increased by 2%.
So the growth is really hyper-concentrated.
Exactly. It's concentrated in the exact systems that define a networked, digitized battlefield: land munitions, cyber command networks, and electronic warfare.
Which brings us honestly to the most critical leading indicator in this entire earnings transcript.
The backlog.
The order backlog, because revenue just tells you what they delivered yesterday. The order backlog tells you what they're guaranteed to deliver tomorrow.
And this number is just staggering. Elbit's total order backlog reached $30.2 billion.
With a B.
With a B. That is an increase of over $7 billion from where it sat just a year ago at the end of March 2025.
It's hard to wrap your head around that scale.
It really is. A $30 billion backlog for a company doing $8 billion in annual revenue provides, what, nearly 4 full years of guaranteed revenue visibility?
Almost 4 years, where they essentially know exactly what cash is coming in the door.
And crucially, 71% of this backlog is generated from outside of Israel.
That international composition is absolutely vital for risk mitigation.
Because they aren't relying on just one government's budget.
Right. If 71% of your future revenue is tied to NATO and allied nations spread across Europe, North America, and the Asia Pacific, you are fundamentally insulated.
from like localized geopolitical shocks or a single parliament getting deadlocked on a budget vote.
Exactly. It spreads the risk out beautifully.
Okay, but I need to play devil's advocate here and challenge the actual durability of this backlog.
Let's hear it.
We are looking at a world right now with highly active, highly visible conflicts in Eastern Europe and the Middle East.
Right. Unfortunately, yes.
So it is fairly easy for a defense contractor to sell systems when the threat is actively playing out on the evening news every night.
Fear drives procurement.
Exactly. But what happens if diplomatic solutions are actually reached? If the geopolitical temperature cools down significantly over the next, say, 12 to 18 months, how much of this $30 billion is just a temporary, reactive spike in wartime spending?
Like, do the contracts just evaporate?
Yeah. Are they ironclad, or do these countries just call up and say, hey, war's over, cancel the drone order?
That is a great question, and it highlights the structural difference between what we call tactical replenishment and strategic modernization.
Okay, break that down for me.
If a country orders 1 million rounds of small arms ammunition because they are actively fighting, and then the conflict suddenly ends, yeah, they might try to cancel or delay the remainder of that order. That's tactical replenishment. But look at the timeline the CFO provided for this specific $30.2 billion backlog. Approximately 49% of it is scheduled for delivery in the remainder of 2026 and throughout 2027.
Okay, so that's the near term.
Right. But the remaining 51% is scheduled for 2028 and beyond.
Wow.
Sovereign governments do not sign binding, complex contracts for delivery in 2029 just to plug a temporary overnight hole in their current munitions stockpile.
So you're saying they are completely rebuilding the underlying architecture of their armed forces?
Exactly. We are looking at a true global supercycle of defense modernization. Look at it this way. A country that suddenly realizes its entire multi-billion-dollar armored division is vulnerable to cheap, off-the-shelf commercial drones.
Yeah.
They don't just buy a few jammers and call it a day.
Because that doesn't actually fix the root vulnerability.
Right. They have to initiate a 5 to 10-year procurement cycle. They have to integrate active protection systems, network sensors, and autonomous countermeasures across their entire fleet of vehicles.
That takes years of engineering.
Exactly. And once those massive multi-year programs are approved by a parliament and officially contracted, they are incredibly difficult to unwind, regardless of short-term diplomatic shifts. The bureaucracy actually locks the revenue in.
Okay, that makes a lot of sense. And we really saw the sheer scale of this super cycle in the new business they booked just during this first quarter.
The book-to-bill ratio is off the charts.
The CEO, Bezalel Maklis, announced they secured over $4 billion in new contracts in Q1 alone. That is bringing in almost twice as much future business as they are billing out in current revenue.
You literally don't add $7 billion to a backlog in a 12-month period without winning some massive, deeply structural programs.
And the crown jewel of that new business was this $1.4 billion contract from an unnamed European customer.
The language the CEO used to describe this specific award is highly revealing, too.
Yeah, he called it an extensive military modernization program spanning the entire battle domain to provide improved maneuverability and survivability.
And if you look at the shopping list for this single $1.4 billion contract, it is wild.
It's basically everything on the menu, right?
Pretty much. They are delivering uncrewed autonomous solutions, enhanced network systems, land systems, electronic warfare, precision-guided munitions, artillery, air-to-ground systems, and electro-optical designating sensors.
That's practically a whole new military in a box.
And all of it is tied together by those software-defined radios we were just talking about.
Okay, so why buy all of that from one company? I mean, why wouldn't a country shop around and get the best drone from company A and the best artillery from company B?
Consider the integration nightmare a Ministry of Defense faces if they tried to do exactly that.
Like, they don't talk to each other.
Exactly. Say you buy the drone from a French startup, the artillery from a legacy German company, the radio from an American firm, and the targeting sensor from a British company. When your soldiers in the field try to plug them all together, the software protocols clash, the latency is too high, and the system just fails.
Right. The drone spots a target, but it takes 10 seconds for the data to translate to the artillery piece, and by then, the target moved.
Precisely. By awarding the entire $1.4 billion package to Elbit, this European nation is buying a fully enclosed, fully integrated ecosystem. The sensor on the drone natively speaks the exact same code as the software on the artillery piece, which natively speaks to the commander's tablet.
It totally eliminates the integration friction. It's kind of like the difference between trying to wire a smart home with 10 different open source components you bought on Amazon that constantly lose their Wi-Fi connection
Versus just buying an entire enclosed ecosystem from one brand where everything instantly syncs on day one.
Exactly. And when you are dealing with precision-guided munitions flying at Mach 2, you really cannot afford a Wi-Fi latency issue.
No, you can't. And that holistic approach creates a massive competitive moat for Elbit.
Because once they're in, they're in.
Exactly. Once a military adopts your underlying software architecture for their entire C4I network, the switching costs to move to a competitor a decade later are nearly insurmountable. You have locked in the maintenance, the software upgrades, and all the future hardware integrations.
And it seems like Europe is clearly buying into this specific architecture in a huge way, because beyond that $1.4 billion contract, they had two other major developments in Germany.
Yeah, the joint ventures are a big part of their strategy there.
Right. They formed a joint venture with KNDS to deliver advanced Europulse rocket launchers across Europe. And they also signed a cooperation agreement with TKMS, which is a German submarine shipyard, to provide electronic warfare capabilities for maritime vessels.
Don't forget Greece.
Oh, right. Looking south to Greece, they won a $1.75 billion contract to provide pulse rocket launchers to the Hellenic Armed Forces.
And those rocket launcher contracts are particularly interesting because they really reflect a major shift in modern artillery doctrine.
How so? Isn't artillery just, a big gun pointing up?
Well, traditional tube artillery is highly effective, sure, but it requires the launcher to remain relatively stationary to aim and fire, which makes it incredibly vulnerable to counter-battery radar.
Meaning the enemy can track where the shell came from and fire back at you.
Exactly. Modern rocket systems like Elbit's Pulse allow a crew to fire a massive barrage of precision-guided munitions and immediately drive away before the enemy can even trace the trajectory and return fire. Shoot and scoot, basically. Exactly. And the demand for that high-mobility, high-precision artillery is just surging across NATO right now.
Wow. Okay, let's cross the Atlantic and look at the United States, because Elbit Systems of America is executing on some very highly specialized optical and defense programs for the Pentagon.
The optics contracts are fascinating.
Yeah. So in March, the U.S. Army awarded them a $120 million contract for the Soldier-Borne Mission Command, or SBMC. The CEO called this a potential revolution in soldier lethality, designed to redefine how soldiers operate and connect in complex environments.
Right, because night vision technology has undergone this absolutely massive evolution recently.
It's not just the green goggles anymore, right?
Not at all. Historically, night vision was purely an analog process. You had an image intensification tube that gathered ambient starlight, amplified the photons, and projected a green image into the soldier's eye.
Yeah. Basically, it just let you see in the dark, but that was the only trick it had.
Exactly. But the modern systems Elbit is building, like the Enhanced Night Vision Global Binocular or ENVGB, these are entirely different beasts.
And they just received a $212 million delivery order for continued production of the ENVGB right after the quarter closed. So what makes the ENVGB so radically different from those old green-tinted goggles?
It is the integration of sensor fusion combined with augmented reality.
Augmented reality, like a video game HUD.
Yes, exactly like a heads-up display. The ENVGB doesn't just amplify ambient light. It overlays a thermal imaging sensor directly on top of the optical image.
Oh, wow. So you get both at the same time.
Right. This means a soldier isn't just looking at a slightly brighter version of a dark forest. They are instantly seeing the glowing heat signatures of targets hidden behind light foliage or smoke.
So you can't hide from it.
Exactly. But more importantly, the system is fully networked. It wirelessly connects to the soldier's weapon sight.
Wait, the goggles talk to the rifle?
Yes. A soldier can literally point their rifle around a corner, and the video feed from the rifle scope is projected directly into their binocular display. They can accurately aim and engage a target without ever exposing their head or torso to enemy fire.
That is an unbelievable tactical advantage. Just shooting around corners accurately. And the business narrative behind this ENVGB contract is almost as fascinating as the tech itself.
How they won it, you mean?
Right, because the Pentagon historically hates single points of failure. They usually split the production of critical systems like night vision among 2 or 3 different defense primes.
Just to ensure that if one factory has a supply chain issue, the Army still gets its gear.
Exactly. But for this massive $212 million phase of the ENVGB rollout, which stretches all the way through 2028, Elbit Systems of America was selected as the sole prime supplier.
And that represents a really profound level of trust from the U.S. Department of Defense.
I mean, to get a monopoly on a frontline system like that.
Yes, exactly. To win a sole source contract for a critical frontline combat system, a manufacturer has to prove that their quality control, their supply chain resilience, and their unit economics are just vastly superior to the competition. It is a massive validation of their U.S.-based manufacturing footprint.
Definitely. And we also saw major movement in their active protection systems, specifically something called the Iron Fist.
The Iron Fist is incredible tech.
Yeah, they locked down an order worth over $200 million for the U.S. Bradley infantry fighting vehicle and another contract for the CB-90 combat vehicle for an unnamed NATO country. I really think this is a technology that completely changes the economics of armored warfare.
It absolutely does.
Let's break down how an active protection system actually works, because it isn't just bolting thicker and thicker steel plates onto a tank, right?
Adding more steel to a vehicle eventually hits the hard limits of physics. The vehicle becomes too heavy to cross normal bridges, it becomes too slow to maneuver in urban environments, and it consumes way too much fuel.
Plus, rockets are just getting better at piercing armor anyway.
Exactly. Anti-tank guided missiles, or ATGMs, have become incredibly cheap and prolific. A $50,000 shoulder-fired missile can easily destroy a $10 million main battle tank. The economics of armor were completely inverted. The attacker had all the financial advantage.
So how does the Iron Fist solve that math problem?
Think of it like the airbag and crash avoidance system in a high-end luxury car, but engineered for explosives.
Okay, I like that analogy.
The Iron Fist system mounts a localized, miniaturized radar array on the outside of the vehicle. This radar essentially creates a 360-degree invisible dome around the tank.
Just constantly scanning.
Right. And when an enemy fires a missile at the vehicle, the radar detects the incoming projectile in milliseconds. It calculates the trajectory, the velocity, and the exact intercept point.
And then what? It shoots it down.
Yes. The system's computer triggers a small explosive interceptor charge that shoots out from the vehicle toward the missile.
It essentially fires a controlled shotgun blast to intercept the missile midair before it hits the armor.
Precisely. The interceptor creates a massive shockwave that destroys or deflects the incoming missile a few meters away from the vehicle's hull.
That is insane.
And the entire process, from detection to calculation to interception, happens in a fraction of a second, completely autonomously.
The crew doesn't even have to press a button.
No. Human reaction time is too slow. The computer handles it all. And this allows militaries to design vehicles that are significantly lighter and more mobile because they no longer have to rely solely on 2 feet of depleted uranium armor to survive a direct hit.
And when you have an asset like the U.S. Bradley infantry fighting vehicle, which is literally carrying a squad of infantry in the back, the survivability metrics are paramount. The U.S. Army committing over $200 million to integrate Iron Fist onto the Bradley fleet is a massive endorsement of the system's reliability.
It proves it works in the field, absolutely.
We also need to look at the aviation side, specifically regarding the Israeli Ministry of Defense orders. There was a flurry of contracts for integrated command systems, advanced avionics, and DRCM systems for their new CH-53 heavy-lift helicopters.
DRCM stands for Directed Infrared Countermeasure, for anyone unfamiliar. It uses a laser to essentially blind the seeker head of an incoming heat-seeking missile.
Right, literally blinding the missile so it loses the helicopter. But the aviation contract that really jumped off the page for me was signed in May, right after the quarter ended, and it was for the F-35 fighter jet.
That's a huge program to be involved in.
The Israeli MOD contracted Elbit to develop an extended range capability for their F-35 fleet. Now, the F-35 is manufactured by Lockheed Martin in the US, so why on earth is Elbit getting a development contract for it in Israel?
Because it's a highly specialized local requirement. Look, the F-35 is a 5th-generation stealth fighter. Its primary advantage is its incredibly low radar cross-section. It is virtually invisible to enemy radar.
Right, that's the whole point of spending all that money on it.
Exactly. But to maintain that stealth profile, it has to carry all of its fuel and all of its weapons internally, inside the belly of the jet.
Because if you hang stuff on the wings, the radar sees it.
Right. If you bolt traditional external drop tanks onto the wings just to fly further, you ruin the stealth geometry and turn the jet into a massive glowing target on a radar screen.
Which severely limits the operational radius of the aircraft, right? Unless you have a fleet of huge aerial refueling tankers circling nearby, which are themselves highly vulnerable to being shot down.
Exactly. Israel requires their F-35s to have a significantly longer unrefueled combat radius to conduct long-range strategic missions without relying on those vulnerable tanker fleets.
So they need more fuel, but they can't put it in regular drop tanks.
Right. So Elbit has been tasked with engineering a solution, and it will likely be highly advanced conformal fuel tanks that seamlessly blend into the aerodynamic and radar-absorbing profile of the fuselage.
The engineering tolerance required to alter the outer mold line of an F-35 without compromising the stealth coating is just mind-bending.
It is an incredibly difficult physics problem.
But the financial implication is even bigger than the engineering feat. Management explicitly stated on the call that developing this capability for the Israeli Air Force creates a massive export opportunity down the road.
Oh, absolutely.
If Elbit successfully engineers a stealthy range extension solution, every single allied nation operating the F-35, and we're talking the UK, Japan, Australia, various European partners, they all become potential customers.
And it is the perfect distillation of Elbit's overarching business model.
The beta tester model.
Yeah. The Israeli Ministry of Defense essentially acts as a highly demanding, well-funded beta tester for them. Elbit develops a bespoke, cutting-edge solution for a very specific local operational requirement.
And once they prove it actually works in combat,
they immediately commercialize it and export it globally to NATO and allied forces. It's brilliant.
It really is. Okay, so we have established the sheer volume of demand here. A $30.2 billion backlog, multi-billion-dollar European modernization contracts, sole source U.S. Army optical programs, and high-end F-35 engineering projects.
The demand curve is just astronomical.
It is, which brings us to the harsh operational reality. Because having $30 billion in the pipeline is fantastic for a press release, but execution risk is the silent killer in the defense sector.
Oh, without a doubt.
I mean, if you win a $1 billion contract, but you can't source the raw microchips, or you can't find the welders, or you literally don't have the factory floor space to build the stuff, that backlog turns into a massive liability of delayed deliverables and punitive penalty clauses.
You are hitting on the exact question that an analyst from Bank of America, Ron Epstein, really pushed the CEO on during the Q&A portion of the call.
Yeah, he went right at it.
He pointed to the aggressive ramp-up required to actually deliver on this massive backlog and asked point blank about choke points. He specifically mentioned energetics and supply chain friction.
And the CEO's response was surprisingly definitive. I mean, in an era where literally every manufacturer on Earth is blaming global supply chains for missed quarters, Bezalel Machlis stated that he does not see any current bottlenecks in their supply chain.
Which is a bold claim right now.
Very bold. He acknowledged they had issues up until about a year ago, but they have resolved them. And he used a phrase I just love. We try to control our destiny as much as we can.
And in defense manufacturing, to control your destiny really means aggressive vertical integration and strategic stockpiling.
Like hoarding the materials you need.
Essentially, yes. Take energetics, for example. Energetics are the highly specialized chemical compounds, those solid rocket propellants, the RDX, the HMX, that actually make munitions explode or allow rockets to fly.
You can't exactly buy that stuff on Amazon.
No, you can't. And over the last few years, the global supply chain for these specific chemicals became a massive bottleneck. There were only a few primary suppliers globally, and they were completely overwhelmed by demand.
So how did Elbit get around that?
They mitigated it by deeply integrating their own supply chain. They established multiple redundant suppliers for external components, and crucially, they actively built up their own internal inventories of critical materials, like energetics, long before the global shortages became acute.
Okay, so they secured the raw materials, they have the powder, they have the steel. But assembling advanced electro-optics and autonomous AI drones requires highly specialized human capital.
The engineers.
Right. The labor market for aerospace engineers and software developers who also have government security clearances is incredibly tight right now.
That's one of the hardest roles to hire for.
So if you have to scale your workforce rapidly to meet a $30 billion backlog, you usually bleed your profit margin because you have to overpay for talent, and onboarding thousands of people creates massive operational drag. So how are they expanding their operating margins to 10% while simultaneously managing a massive hiring surge?
The labor metrics they disclosed are honestly staggering. They currently have a global workforce of roughly 24,000 employees.
Which is huge.
Yeah. And they hired about 2,000 people last year, and they plan to hire another 2,000 people this year.
Wow.
Expanding your highly skilled headcount by nearly 10% annually without completely crushing your margins requires a very specific corporate culture. And management pointed to their internal mobility program as a key driver of retention and efficiency here.
They allow employees to shift domains internally, right?
Exactly. Think about it. If you have a brilliant software engineer who has spent 3 years working on helicopter avionics and they're getting burned out or bored, you don't let them leave for a commercial tech firm in Silicon Valley.
You just move them to a different project.
Right. You move them over to the AI counter-drone program.
Yeah.
They already have the security clearance, which saves months of waiting. They already know the internal corporate systems. And they bring fresh cross-disciplinary expertise to the new division.
That drastically reduces the friction and cost of onboarding new talent.
It saves millions in recruiting and training.
Okay, so let's look at the physical infrastructure. You have the materials, you have the people, but you still need the actual factory space to bend the metal and assemble the circuit boards.
Right, the hard assets.
The CFO noted they are targeting roughly 3% of revenues for capital expenditures, or CapEx, in the near term to build additional capacity. That is a significant amount of capital flowing straight into hard assets.
And we are seeing that physical expansion execute in real time across the globe. They have a massive new production facility advancing in southern Israel right now. But the more strategic expansion is actually happening globally to support that profound European demand shift we talked about.
Right, they are opening up shop over there.
Yeah, they recently launched a brand new unmanned aerial system, or UAS, facility in Romania. They also completed the acquisition of Utah CS, which is a UAS facility in the United Kingdom.
And this plays directly into what the CEO described as the 2 pillars of their global strategy. The first pillar is having a wide, vertically integrated portfolio, but the second pillar is being local.
That is the secret sauce.
Let's unpack what it actually means for a global defense contractor to be local, because I think this is the absolute key to unlocking those sovereign defense budgets.
Definitely. Look, defense procurement is almost never just about buying the absolute best technology. It is intensely, inherently political.
Because it's taxpayer money.
Exactly. When a European parliament appropriates €1 billion for a new drone fleet, those politicians face massive pressure to ensure that money stimulates their own domestic economy. They want domestic jobs, they want technology transfers, and they want sovereign control over the supply chain so they aren't reliant on foreign factories if a crisis breaks out and borders close.
So if Elbit simply tried to build everything in their factories in Haifa and then just ship it in crates to London or Bucharest, they would probably lose those contracts to domestic European competitors.
Without a doubt. The domestic lobby would kill the deal. So Elbit's strategy is to establish domestic subsidiaries like Elbit Systems UK or their massive facilities in Romania.
And they bring the tech to them.
Right. They take the advanced intellectual property and the R&D that they developed in Israel, and they transfer it directly to these local subsidiaries. The systems are then manufactured locally by local citizens, integrating deeply into the local supply chain.
That's incredibly smart.
The host nation gets the cutting-edge technology, but they also get the high-paying manufacturing jobs and the security of a domestic production line. That is exactly how you win a $1.4 billion multi-domain contract in Europe. You don't export, you embed.
But that strategy requires a constant pipeline of vastly superior technology to justify the local partnerships, right? I mean, the moment your technology falls behind, the host nation will just revert to a fully domestic supplier.
Exactly, which requires an enormous ongoing commitment to research and development.
Which is why their R&D spend is the metric that I think long-term investors really need to weigh most heavily here.
Yeah.
In the first quarter alone, Elbit invested $150.4 million into net R&D expenses. That represents 6.9% of their total revenues.
That is a massive percentage for a heavy industrial firm.
It is. And during the Q&A, the CEO proudly pointed out that this nearly 7% allocation to self-funded R&D is almost double the average of their peer group.
They are actively choosing to sacrifice near-term margin optimization to just massively outspend their competitors on future technology.
And the specific areas they are directing this capital toward are honestly terrifyingly futuristic.
Oh, it's straight out of tomorrow. The CFO outlined their priority initiatives, and they are advanced autonomous airborne, naval, and land platforms, multispectral sensing, and hardcore AI capabilities.
But the exchange that really illuminated the future of the company for me came from a question by a Morgan Stanley analyst. He asked specifically regarding counter-UAS or anti-drone systems.
Right, because the proliferation of cheap commercial drones, modified to drop explosives or act as kamikaze munitions, has completely fundamentally altered the tactical battlefield.
We see it on the news every day.
Yeah. A multi-million-dollar air defense missile is economically unviable if you are forced to fire it at a drone. You can literally buy off the internet for $1,000. You will bankrupt your own country trying to defend your airspace.
Which is exactly why the CEO highlighted their massive investment in directed energy weapons, specifically high-power lasers.
The math on lasers is unbeatable.
Yeah, Elbit is already the source for the ground-based high-power laser solution in Israel, because a ground-based laser provides an infinitely deep magazine. As long as you have electricity flowing to the system, you can shoot down drones for literal pennies a shot.
It completely flips the cost curve back in favor of the defender.
But a ground-based laser has severe limitations dictated by, well, weather and physics.
Right. Atmospheric distortion is the big hurdle. If it is raining heavily, snowing, or there is thick smoke on the battlefield, the laser beam diffuses and loses its thermal energy before it can actually burn through the target.
It just scatters the light.
Exactly. Not to mention, a ground-based laser can only shoot in a perfectly straight line, meaning the curvature of the Earth and any local terrain like hills or buildings severely limit its effective range. You can't shoot what's behind a mountain.
Which is why the CEO dropped a massive revelation on the call. He said Elbit is currently leading the development of an airborne high-power laser. He stated he currently has hundreds of engineers actively working just on this development.
And putting a high-power laser on an aircraft fundamentally changes the geometry of air defense.
Because you're above the weather.
Exactly. You are flying above the rain, above the clouds, and above the terrain. You have a perfectly unobstructed line of sight for hundreds of miles.
And what about power? Lasers take a ton of electricity.
Well, you are utilizing the aircraft's massive jet engines to generate the immense electrical power required to continuously fire the laser. The CEO was totally unequivocal in his assessment here. He believes an airborne high-power laser will, and I quote, change the entire way countries will defeat drones and UAVs and cruise missiles.
And the crazy part is, the laser itself is just the kinetic effector. It is just the tip of the spear. The real value is the software managing it.
The AI brain behind the laser.
Yes. He explained that they are building an entire counter-drone ecosystem managed completely by artificial intelligence. The system aggregates massive amounts of data from radar, signal intelligence, and electro-optical sensors to build a comprehensive enemy picture.
It sees everything at once.
Right. And the AI instantly analyzes the threat environment, understands the trajectory of an entire drone swarm, and autonomously dictates the most efficient response.
Because a human couldn't process 50 drones at once.
Exactly. The AI might decide to use an electronic jammer on one drone, fire a kinetic missile at another, and target the rest with the laser all in a fraction of a second.
And that right there is exactly why the R&D budget is so massive. They aren't just bending metal anymore. They are writing the incredibly complex algorithms required for autonomous threat prioritization and sensor fusion.
But this brings me to a major friction point I have with their capital allocation strategy.
Okay, let's hear it.
We have established that they are pouring $150 million a quarter into AI and airborne lasers. We established they are spending 3% of revenues on CapEx to build new drone factories in Romania and the UK. We established they are actively hunting for new acquisitions.
They are definitely in a massive, capital-intensive expansion phase.
Right. So how on earth does the board of directors look at all of that cash outflow and decide to make the next announcement?
You are referring to the dividend hike?
I am. Management announced they are doubling the dividend. They are taking it from 50 cents per share all the way up to $1 per share, payable in the second quarter.
That's a huge jump.
If I'm an investor looking at a company undergoing a massive technological pivot and a global manufacturing expansion, I want every single available dollar plowed back into the business to secure those contracts and build those factories. Is doubling the dividend right now a sign of hubris, or is it genuinely sustainable?
It's a totally valid concern. But if we look closely at the balance sheet dynamics we discussed earlier, it is highly sustainable, and it actually serves as a powerful signaling mechanism to the broader market.
A signal of strength, you mean?
Yes. Think about it. When a management team is sitting on a $30.2 billion backlog that stretches all the way into 2029, They have unprecedented locked-in visibility into their future cash flows. They know exactly how much capital they need to service their debt, fund their R&D, and build their factories for the next 4 years.
And because of that $210 million in free cash flow they just generated, driven by those expanding operating margins and upfront customer payments, they genuinely have excess liquidity.
Exactly. They aren't starved for cash.
Yeah.
Doubling the dividend is the ultimate expression of executive confidence. They were basically signaling to retail and institutional investors alike. Our operational leverage is functioning perfectly.
We have more than enough money to do both.
Right. We are successfully digesting the supply chain friction, we are fully funding the bleeding edge of aerospace research, and our cash generation is so robust that we can afford to instantly double the yield we return to you, the shareholders.
It really changes the investment profile of the stock, doesn't it? It isn't just a high-growth defense tech play anymore. It suddenly becomes a legitimate income-generating asset for dividend investors.
It appeals to a whole new class of investor.
Well, we have covered an immense amount of technical and financial ground today. We started with the anomaly of Q1 revenues beating Q4. We dissected the operational leverage driving a 51% EPS spike. We unpacked the structural European supercycle driving a $30 billion backlog.
And we evaluated the supply chain resilience and looked at the massive capital being deployed into AI and directed energy.
So it is time to synthesize all of this data. What is the definitive bottom line on Elbit Systems based on this Q1 2026 transcript? Is it a buy, hold, or fold?
The signal coming out of this quarter is aggressively bullish. I'd absolutely categorize it as a buy signal based on the fundamentals.
Because of the margins.
Mostly, yes. When you evaluate heavy manufacturing equities, you rarely see the holy trinity of fundamental strength. Double-digit top-line growth, expanding profit margins, and a multi-year backlog that insulates the company from macroeconomic volatility.
And Elbit is hitting all three right now.
They are currently executing on all three perfectly. The demand for their specific software-defined architecture is structural. It's not just cyclical. Their ability to secure sole source contracts from the U.S. Pentagon while simultaneously managing massive European modernization programs proves their global manufacturing base is highly resilient.
So it's the best of both worlds.
For an investor looking for a defense allocation that merges heavy industry revenue visibility with software-like margin expansion, the data here is just incredibly compelling.
A definitively bullish technical and financial read. The numbers absolutely validate the execution. But before we wrap this up, I want to leave you, the listener, with a broader macroeconomic concept to consider as you review your own portfolio tonight.
The valuation models.
Exactly. We spent a significant amount of time detailing Elbit's massive investments into artificial intelligence, sensor fusion, algorithmic frequency hopping radios, and airborne high-power lasers. They are quite literally building the digital nervous system for modern allied militaries.
The software and AI capabilities are rapidly becoming the primary value driver of the hardware. The metal is just a vessel for the code.
Precisely. Historically, traditional defense contractors, the companies that stamp out steel hulls and forge artillery barrels, trade at relatively modest price-to-earnings multiples. They are valued as heavy industrial.
They get manufacturing multiples.
Right. Conversely, software, cybersecurity, and artificial intelligence companies trade at massive premium multiples because of their high margins and infinite scalability. So here is the provocative question you need to ask yourself. If a company like Elbit is driving its massive margin expansion entirely through AI integrations, software-defined networks, and directed energy, at what point does Wall Street fundamentally reclassify them?
A repricing event.
Exactly. If the market stops valuing them as a traditional metal bender and starts valuing them as a high-tech AI and software firm, the multiple expansion on their stock could be profound. Are the legacy valuation models for defense primes completely broken in an era of autonomous warfare?
That is the exact systemic inefficiency that astute investors look for. When the underlying nature of a business evolves much faster than the market's traditional categorization of that business, massive opportunities is created.
And identifying those underlying shifts is exactly why we tear apart these earnings transcripts every single week. We want to thank you for joining us on this deep dive. We hope we translated the complex engineering and the dense accounting into actionable intelligence for your portfolio.
Keep an eye on those software margins.
Keep challenging the consensus, keep looking for the hidden mechanisms behind the headlines, and keep hunting for those true anomalies in the market. We will see you on the next deep dive.